We're back with another edition of the Morningstar Fund Face-Off, where we compare and contrast two funds versus one another. Today we're going to mix things up a little bit and compare and contrast two firms' stewardship grades. We recently updated the grades for 2011 for 26 firms, and so we thought it'd be a good opportunity today to highlight that and shine the spotlight there. So today we're comparing Beutel Goodman versus Chou Associates Investment Management. Both of these firms scored a B overall on their stewardship, but the underlying factors and how we arrived at those scores were actually quite different in some cases. And so we thought that'd be a good compare and contrast opportunity. So Nick, the first thing that we look at, or one of the biggest factor in coming up with the stewardship grades, is to evaluate the corporate culture of the firms that we look at. In this case, Beutel Goodman scores an A for corporate culture. Talk about how did we arrive at that score?
Yeah, so Beutel Goodman is very strong in that regard. So Beutel Goodman is a private asset manager that has a large presence in the institutional space, but also have a solid lineup of mutual funds. And their A corporate culture really is on the back of a few key things. They have a very experienced team, a deep team of managers that have done particularly well over the long term. Strong risk-adjusted results, especially in the domestic equity and domestic fixed income spaces. And typically we've seen evidence of them putting the interests of unit holders first, both through the communications, transparency, a really nice, clean, tight lineup of funds. You don't really see sort of gimmicky funds coming out of the shop. Mm-hmm. So overall, this is one of the shops that we've come to like quite a bit over the years.
Yeah, so there's already a few areas that I see some significant differences between Beutel and Chou. So Chou receives a C grade for the corporate culture component. And that sort of average score masks some real strengths and weaknesses. So you mentioned the deep team of investment professionals at Beutel. Chou, on the other hand, the depth is limited to one person exactly. The whole firm has exactly 2 employees. Francis Chou is one, and the other is more of an administrative role. And so, there's a lot of key person risk, both from the investment management side and the operational side. There's not a clear succession plan in place right now. There's no person that's going to take the reins when and if Francis Chou decides he doesn't want to run money anymore, or if he just wants to take a vacation or take a day off. There's nobody to really run the funds. And I think part of that comes off of, this started off as an investment club when he was working at Beutel Canada as a service technician, just learning about finance in his spare time. He started this investment club. It was wildly successful. He attracted a lot of assets, eventually parlayed it into a professional investment management shop with nearly $1 billion in AUM. He's approaching that mark anyway, and he really just needs to invest in the business, hire more people to help him think through a whole bunch of things. He outsources some of this work to the legal side and some of the back office duties, but you need to have, I think, tighter control over some of this stuff, and I think he needs help on the product side. So he's launched some funds that just make us scratch our heads, like Chou Europe, for example. There's a fund that just I don't think there's any reason or any business launching, and so I think he could use some help thinking through those decisions. So overall, but he's very transparent. He has a healthy attitude towards fees. He's lowered them in years where he hasn't lived up to his own performance standards. So there's a lot of real strengths, but some weaknesses too, and that's why he ended up with a C overall. The next component is manager incentives, and so this area is are the managers, the portfolio managers' interests aligned with those of the investors? And so one of the key ways that we like to see that is through strong co-investment. The managers eat their own cooking. So how does Beutel look in this regard?
Yeah, so unfortunately, Beutel did not provide too much information on, no information really on co-investment, and very little in terms of whether bonuses are tied to sort of longer term performance, which is something we want to see, and like you said, evidence of strong co-investment. What we were able to do is glean some information on co-investment by looking through some regulatory filings, and we were able to find that a few key managers do have significant amount of money invested in either their own funds or other funds offered at the firm, which is good, but not enough really for us to extrapolate and really assume that everyone at the firm, at least the key investment professionals, do have a meaningful amount of co-investment, which is something that we would like to see. So it is a privately held firm. Many employees are owners of the firm as well, but we see that as it's not as direct an alignment with the interests of unitholders as strong co-investment, and I think also secondarily bonuses tied to longer term performance.
Yeah, I mean, I think that's a good point. We often get a lot of firms saying, well, we own our business, we're investors in the business, so that our interests are now aligned with our fund investors. Mm-hmm. And there are certainly cases where that's true. So if the funds perform well, that means the assets are rising, the fund managers collect more fees because it's based on the percentage of assets, and it attracts attention and general goodwill and all that. But other areas, their interests are directly at odds with each other. So if in the case of fees, a higher fee benefits the company shareholder directly at the expense of the fund investor. And so it's not a perfect alignment, and as a result, we don't award credit for firms where the investment professionals also own the business. What we want to see, do they buy the funds and invest in the funds? Chou, on the other hand, is I think a leader, an industry leader in this regard. He has about 50% of his liquid net worth invested in the funds that he offers, and I still believe to this day he is his own largest client, investor in the funds. And he also does happen to own fully the business itself. But really, we give him an A grade for the 50% of his liquid net worth tied up in the funds. If the funds do poorly, it's going to significantly dent his own wallet. And so I think he has ample interest in seeing the funds do well. So the last major factor that we evaluate for stewardship is fees. Talk about Beutel Goodman's fees.
Sure. So on the fee front, we looked at both their Class B shares and Class D shares separately. The Class D shares have been around longer. They're the ones that are geared towards the do-it-yourself investor with very minimal trailer, and typically on an absolute basis are among the cheapest in the respective categories. But still, we're still able to find a handful of funds that are cheaper than these ones. And when we look at the Class B shares, which were introduced more recently, those are geared towards investors working with an advisor, and they pay a full trailing commission. And in part of that to the dealer, and then part of that goes to the advisor. Those stack up well against others in that space as well. But once again, there were a handful of funds that just beat them just a bit.
So they end up with a B overall because they look attractive, but not quite industry leading in each of those channels. So Chou, on the other hand, is a very tough situation because his funds offer a half-point trailer, so typically it's 100 basis points. His funds charge 50 basis points. And as a result, if you compare him to the advice channel, his funds look very cheap. If you compare him to the do-it-yourself channel, which typically don't pay any trailers or more marginal trailers, he looks more expensive. And so he either looks very good or very poor. We overall end up deciding to give him a B because on an absolute basis the funds are quite cheap, and even compared to the do-it-yourself market, it's not outrageously expensive, and certainly compared to the advisor channel, they are very cheap. And so, and also with his healthy attitude towards fees in the past, where he's rebated the MER in cases where his performance hasn't lived up to snuff, we've decided to award him a B overall.